Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The pre-opening should be quite interesting today because the SGX Nifty is indicating flat start, though the way momentum is there, it will be tough to see the market perhaps having a bit of a flat start. But then in the last 2 days, we've seen 170-point rally. Hang Seng is up quite a bit. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, Ashwani. What's the trade today after the 2 days of back-to-back rally?
Good morning. The odds of sideways day tends to be higher if you get these two upside days. But what you should be looking for if you have to trade intraday is that you get a 25-30 point dip on Nifty and maybe 80 to 100 point from the highs on Bank Nifty, and then you can enter. I don't want to buy into a gap up, etc. today, even if at the open for some reason, TCS and Jet Airways, etc., we come off. That would be a good opportunity. But if you open 30 points higher, then you will get into all kinds of trouble with, intraday position. If you holding for last 5 days, then I don't think there's a problem. Whatever it happens, you'll get two sideways days and probably then the market will continue on the upside.
Okay, fair point. Sudarshan, good morning to you. You maintain the buy, buy call.
Yeah, good morning. Well, today is a very good day to take profits. So after many days of buying at every point, dips, breakouts, wherever, I think today I would suggest your position should be closed in the Nifty and the Nifty Bank both. Take profits and step aside. My sense is that we are again entering into a process of consolidation, which is always choppy. There is no need to maintain a position when this happens. So at the top of this rally, hopefully, we'll get out with money in our pockets. So my suggestion is close these trades, no more trading today.
Okay, no more trading today, all right. Well, before I go across to Mitesh, Ashwani, I was just looking at your Twitter page and I noticed that you made 6 lakhs yesterday and donated that money for the Kerala Relief Fund. It is so very inspiring and I hope you continue with such great deeds. I also wanted to ask you about the kind of, broad-based rally that we've seen in the market now. I mean, Reliance, HDFC and L&T were the big movers yesterday. Do you see a lot more participation from these large caps?
Well, for the moment, it does not look like the rally is petering out. As the rally broadens, there is more upside. As it narrows down, chances of getting into correction are higher. So far, even HDFC Bank have recovered. Large corporate banks are playing out, consumption, Reliance. So more than a consolidation, I don't think any sort of large correction should be expected. So the sense is that 100, 150 points is the max correction you'll get on Nifty. And the market probably has made a base at this 10, 11,000 and is now in a fresh move. So I think it's looking fairly healthy and much better than it was looking 500 points lower.
Yes, it is for sure. Mitesh, good morning. Your thoughts on index?
Good morning, Anuj. So I think yesterday we said that getting past 11,480, 500 is a good event. So that becomes the immediate pivot support. For timing, stay positive, use declines to buy, and I've not revised my targets aggressively given the fact that we are quite away from the short-term and intraday moving averages. So maybe around 11,600 or 650 zones, I think you will see profit booking happening. So a couple of subdued days after a good rally, but I think the buy on dips kind of trade continues.
Okay. Well, with that, let's come to stocks. Ashwini, I noticed that you are persisting with some PSU banks.
See, this is a new sector for the market and, all sorts of corrections are getting gobbled up. They went through a bit of a correction and yesterday they again started to come out on the upside. So Bank of Baroda is a buy with a stop of 148, target of 160. Canara Bank is a buy with a stop of 282, target of 298. L&T Finance is a buy with a stop of 182, target of 194. Tata Steel is a buy with a stop of 595, target of 620. And Hindalco is a buy with a stop of 222, target of 234.
Yep, metals and PSU banks both had big moves, of course, in late trade yesterday. Sudarshan, good morning. You're not trading the index today, but what about individual stocks?
Yeah, but then I also have a very subdued list. NIT Tech is a buy, belongs to the IT sector, which is doing well independently. Ajanta Pharma is a buy, belongs to the pharma sector. These are two sectors where I have been upbeat. And Havells from the consumption. So the three sectors that I like are represented by the three buying ideas: Havells, Ajanta Pharma, and NIT Tech. I have two short sells. I'm assuming that markets will become choppy. And these are intraday shorts, but they are available and worthwhile. One is Z Entertainment, and the other is Shriram Transport Finance, which after that news and merger and everything else is in a mess on the charts.
Okay, all right. Well, we'll come to you gentlemen in just a bit and complete that interaction. But for now, we also have a management joining us. N. Srinivasan of India, the Vice Chairman and MD of India Cements is with us. Remember, of course, the situation in Kerala has been very unfortunate, but there could be some reconstruction opportunities as well as demand picks up over the next few weeks and months. Mr. Srinivasan, good morning. If you can tell us what the impact, according to you, has been on the industry itself, and what kind of reconstruction opportunities does this, throw up for the sector over the next few weeks and months?
Kerala, you're talking about Kerala.
Kerala, yes.
See, Kerala has remarkable recovery capacity. And even yesterday, they started consuming cement. So I think that Onam is at the end of this month. I think post-Onam, September will see very strong demand in Kerala.
Okay.
It will recover very well. You see, it is even, what is remarkable is even when all these floods were going on one day we had no sale. On other days there was some small sale, One would have thought there would be absolutely no sale. Okay. And yesterday was almost 70% of our normal volume.
Okay. Mr. Srinivasan, good morning. Thank you for joining us. What is normally the share of your sales that comes from Kerala? And, would you be able to assess the demand immediately, or would you have to wait for the rains to stop?
Rains have stopped in Kerala.
Okay. Monsoons are over, you say?
But no, the rain has stopped.
No, the flooding rain, no. I meant rainy season. I mean, during Onam, it rains normally.
Rainy season, up to Onam. Onam is only end of the month.
30th, yeah.
So, see, of my sale, Kerala will represent maybe 12-14%.
Okay.
So, we are a strong brand there. I expect that recovery will take place, which we will know. I mean, like today is maybe a little too early, but a week from now, one can gauge exactly how the recovery is going on.
Okay, so you said 12 to 14% of your sales comes from Kerala and demand will pick up there. But ex of Kerala, how has the demand situation been? Because we're hearing that there's huge infrastructure pickup, especially in some of the southern markets. What are you looking at?
See, I can point this out to you that the first quarter of last year, we worked at 67% utilization. First quarter of this year, we worked at 80%.
Wow. Okay.
And going forward, I expect this to improve. This is what I said in our analyst conference. And this is caused by, there is improvement in retail demand, but infrastructure is really very huge demand. Roads, dams, everything seems to be being built now. And 6-7 months ago, if you had asked me, I would not have, I would have said it still pickup is not there. But I can't say that now. I mean, almost every company is feeling it. And you take the west, north, east, and central India, they already were at a much higher capacity utilization. Okay. Now south has started to pick up also.
Okay. Mr. Srinivasan, your point about capacity utilization is most interesting. Today we had a report from Macquarie which was saying that this far the pace of addition, supply growth was higher than demand growth, but this year they expect that demand growth is at 7.5 to 8%, but growth of capacity is at 4%. So clearly demand outstripping supply. If your capacity utilization is improved so dramatically to 80%, then you must be seeing a lot of operational advantages. Should we see higher margins and lower finance costs, for instance, for you?
No, as far as we are concerned, we already explained that this higher capacity utilization will ultimately translate into much better prices. And we have in the first quarter demonstrated operational efficiencies which have brought down our costs, which is how we combated the increase in input costs because of fuel and other costs.
Yes.
As far as what my assessment is, these prices will slowly start to move up.
Okay.
Definitely by the fourth quarter of this year, that is January, March, you will see much fuller utilization and the prices starting to move up very sharply.
Have you already planned some price increases, for instance, for September itself? Or have you, could you manage something in August?
No, we are August because of Kerala, etc. We didn't manage much in August, but from September we will slowly inch up. We will increase price by ourselves.
Okay, so what was the EBITDA per ton in the quarter gone by, and what is the expectation as we head into the next few
I don't have those figures in front of me. We had 100 people on the call where we gave all the details.
Sure, but is it trending higher? That's just what I'm trying to get at.
My point is very simple, that the first quarter was one of volume growth. The prices will, compared to the fourth quarter or first quarter last year, prices were lower. But going forward, I expect that correction to take place.
So, since, I'm only looking for near-term visibility, can we expect, say, a 5% rise in cement prices, say, over September, October?
Madam, you will have to ask me in first week of September.
All right. All right.
Just one final question then, if you have some time. Geographic mix in terms of selling of cement, where are you seeing the higher, growth trajectory coming from?
It is infrastructure. Finally, there is huge, for example, Andhra, Telangana, Maharashtra, Northern Karnataka are all infrastructure driven now.
Oh, wow.
And this is without this Amravati being built in Andhra. And we are yet to see the road construction in Tamil Nadu, which they say will take place.
Okay. But those are all government projects. You are seeing more government demand?
It is not government in the sense that these are infrastructure projects being run by, constructions are all being done privately.
Okay, Mr. Srinivasan, normally when the industry gets to 80% capacity utilization, or even a company gets to 80% capacity utilization, it starts planning capex. Are you doing that? And I'm asking you because last time you said that there is a debt reduction plan in place. So how will the two work?
See, this started out as a sector discussion.
Okay.
I agreed to that. I did not agree to an India Cement discussion,
Okay.
But the point is ultimately, I will look at even higher capacity utilization before I start. But I answered this call on my analyst call.
Okay.
Sure.
This very same question I answered the other day. Yeah.
Okay, Mr. Srinivasan, we'll leave it at that. Thank you so much for taking the time out and speaking with us. That's India Cement saying that September onwards, they see very strong demand in Kerala, and Kerala has been also very resilient. Yesterday, they saw 70% of normal demand.
No, two key takeaways, actually. 80% capacity utilization.
Yeah.
That's about a time when people start, the output gap is closed, as economists would say. That is, now you have to start planning higher output, and that is exactly the time when producers get pricing power. That was the second takeaway from Mr. Srinivasan's conversation. So two important takeaways, and this is coming on the back of Macquarie already releasing that report today, being very bullish on cement companies, though their pick was ACC. So let's watch how cement companies do today. In any case, in the aftermath of the Kerala problem, Kerala floods, we have seen housing finance companies do well, and I would assume cement as well. Mitesh, I think what are your own stock picks for the day? And then I'll come to the question on cement and housing finance. What are your specific stock picks?
So I have a mix of buy and sell, but clearly more buy calls. The solitary sell call which I have is on Container Corporation, where the indicator setup is turning negative. So sell with a stop at 640 half, look for targets of 600. And the buy calls are Indigo, that's a buy with a stop at 1069 for targets of 1124. Oriental Bank of Commerce is another buy call, buy with a stop at 79 half for targets of 86. I also have a buy on Pidilite, which is broken out of a mild consolidation, so keep a stop at 1129, look for targets of 1180. And RBL Bank is the final buy call, that's a buy with a stop at 578 for targets of 620.
We are still counting down to the market, pre-market opening rates, but before that, let's put some F&O strategies on the table. Chandan Taparia of Motilal Oswal Securities joins us. Good morning, Chandan. Good to have you with us. Which stocks are you trading on the F&O front?
Thanks. Very good morning. First, talking about the Nifty, it surpassed the previous lifetime high of 11,495 and made a new lifetime high at 11,565. We have seen a significant change in the put writing activity, and maximum put OI has shifted from 11,000 to 11,300 and 400 strike, and call writing has shifted to 11,600. So that is giving the scope for further move towards 11,600, 635. So overall trend of the market could remain positive, as it has been moving in a rising channel and supports are gradually shifting higher. So trend could remain positive. Talking about the trading idea, first there is buy on L&T Finance. On last trading session, it has seen the build-up of long position by 5%. It has given a consolidation breakout from its pole and flag pattern by surpassing its multiple hurdle of 185 zone. We have seen significant jump in the trading volume as well, which indicates that next leg of momentum could be seen on immediate basis. So recommending to buy with a stop loss of 182 and expecting it to move towards 197 kind of level. Second trade is buy on Escorts. This stock has taken support at the rising trend line. We have seen some short covering activity. It has surpassed its immediate 50-day exponential moving average. Longs are adding with surge in the open interest activity. So recommending to go long on Escorts with a stop loss of 878 and expecting it to move towards 920. On last trading session, we have seen breakout in Nifty auto segment as well. So selective auto stocks are likely to do well. Now talking about the third trade, that is from the option front, Tata Steel. Most of the metal stocks are finding some buying interest. Tata Steel, which commands the highest open interest on the coal side at 600, has seen the significant coal unwinding. Fresh put writing is visible, so one can buy Tata Steel 600 coal near to 12 rupees, put a stop loss of 7, and this coal can move to 22 rupees. Last trade, that is on the Reliance. This stock is commanding the market momentum, given a consolidation breakout of last 6 to 7 trading session, trading at new lifetime high. We have seen put writing at all the strikes, which indicates that momentum could extend to 1260, 1265. One can buy 1240 coal near to 15 rupees, and this coal can move towards 30 rupees going forward.
Okay. Chandan, thanks a lot for all those trading ideas. Steel stocks were up yesterday. There's been a bit of a run once again in the metals. Here's Manisha with a quick roundup of all the commodity market action. Manisha, good morning.
Morning, Anuj. Thank you for that. Well, yes, yet another day when you have seen the strength in the steel prices continue. It is trading at a 7-year highs in the Shanghai market, and that's the rebar steel, of course. If you look at the hot rolled coil, that one is trading at an all-time highs that has been hit in the Chinese markets today. The real concern really is about the tight supplies. You also have seen China continue to curb output, and that is only going to get stringent as we hit the winter months. So ahead of that, you have seen a lot of strength come back here. Not just that, if you look at the copper prices, we are back above $6,000 per ton. So there is strength in the other base metal prices also. Also supportive is the fact that you have seen the US dollar decline by 0.5% overnight and is trading in the negative. And this is after the US president has showed displeasure about interest rate rise from Fed, while he also has said that he doesn't see an immediate resolution from the US-China trade war concerns. But the markets really would continue to watch out for that conversation of whatever comes out of that and whether or not the dispute really gets resolved before November. So there are various things happening in the global markets which the markets will keep an eye on. A quick word on the crude oil prices, where we also have seen some strength continue. This is because of the Iran sanction concerns and also because the US energy products are at a 4-year low. The inventory is therein, and you are entering into a strong demand period. That is what is supporting crude oil prices in Asia.
Okay, Manisha, thanks a lot for that. Well, for now, we have less than 5 minutes to go before the pre-opening rates kick in. And given the kind of action we've seen in the last 3 or 4 days, it promises to be a very interesting